following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another wonderful and exciting day here at the Power Trading Hour. I'm your humble, lovable, and squeezably soft host. As always, we like to come to you pretty much around this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, we've got the short squeeze that we were looking for. As we said over the last 3 days, these days in the long term, in the short term matter, of course, because you can get stopped out. But in the long term, just go back and look at every third Friday of the month and see what happens the Monday and Tuesday after. Even if it's closed on Friday and options expirations on a Thursday, look at the Monday and Tuesday after. You normally, if you're up on Monday, you're down on Tuesday. If you're down on Monday, you're up on Tuesday. And we've got that pattern continuing on. There are organic reasons for it. That is that options coming on and off every single month cause markets to move. If you sell a put or a call, a lot of times you just right next to it, you own the equity to hedge the other side of that options call. You collect the premium at the end of the month. You have sometimes a guaranteed profit most of the time, and sometimes you don't. But if you're an option market maker, your job is to basically sell guns to both sides at the end of every expiration cycle on a monthly cycle. Guess what? Those equity positions have to come on and off, and normally you'll see it move one way or another. And Wednesday actually is the day when you see the market move in a way that is congruent with its at least medium or even short term, maybe the next week. So the Wednesday after is always a good day to look at. I don't spend a lot of time looking at what goes on in the broad indexes. I certainly look at individual equities, and this is a good time to either go long ones that are being hammered by option market makers or to short them if they are running the shorts out the other side. And we've got a little bit of both going on today. We'd been along in the daily newsletter, a concrete and a railroad. With the juice today, 2.4 billion shares as we start the show. Should have seen a little bit more, after kind of some of the discussions about what's going on with the executive orders, pipelines, that kind of stuff. Yeah, I should have seen a little bit more in them. That tells me they're probably kind of tired. I'll go ahead and probably sell them at the end of the day and wait for the retrace to get back in. But in a market that really hasn't moved more than about 10 S&P points since we bought these positions, we've had good gains. So I can't really get too wound up on either side of a market on a day like this, but I can take opportunities to say stocks that I wanted to short that were pushed up rather ridiculously today, I'm more than willing to take a shot at them. Stocks that have been pushed down today can be very good deals in themselves. So I look at these kind of days, especially today, the Tuesday after, as a great day to look at the opportunities. Now, volume's good. We're breaking highs. We're going to probably close on all-time highs out here. But what does that mean after today? And like I said, tomorrow, at least indexes today, the close today doesn't mean a whole lot to me. But the close tomorrow, I think, is 5 to 10 times more important than the close today. So we'll see. The Dow's at 19,937 and 17 cents. So that means we have, 63 cents left to go on the Dow. I kind of close the show every day on a sell when you can, not when you have to. And for me, this is a pretty good day. Seeing a lot of stretching in some stocks that I'm long, and always a good time to reflect when everybody else is getting bullish. I like to be a seller. When everybody's selling, I like to be a buyer. Isn't that the heart of the market itself? When everybody's fearful, you've got to be greedy. When everybody's greedy, you have to be fearful. I am just a little bit fearful out here. Not enough to pull the trigger on the indexes, but certainly on a few stocks. And we're doing that today in the newsletters. So what else is going on today? Well, as we said, the market kind of popping up a little bit. Had a few stocks out here really squeeze some shorts. One of the other things that I get afraid of is when shorts quit shorting. And that is one of those things that's happening today. Doesn't mean we can't go a little higher, but I'm kind of at the kind of far end of the trading range we've been in. The volume does not suggest that there is enough of that volume to continue very far. Could we get another 20 S&P points? I think we could. Can we hit 20,000 on the Dow? Sure. Is that meaningful? I don't really know. Again, since I came back in, what was it? I came back, we came back from vacation on the 3rd. I was more a proponent of a range-bound market. We've probably gone far enough out of that. But today, can we hold this thing up? Yes. If this thing rotates and heads down, we're in some real trouble. If it goes higher, can it still stumble up a little higher? The answer is yes. So while there are no clear road signs, I do see some signs of maybe a slippy. Why can't I say it today? Must have had another aneurysm. Slippy when wet. Slippy? I guess I just can't say it today. It is a tough day. So anyway, as always, we like to start the show with a little bit of history.
And it's all just a little bit of history repeating.
Slippery when wet, he said. What else is going on? In 1848, workers dredged a stream to speed up the water flow into the sluiceway of John Sutter's sawmill in Coloma, California. That's near Sacramento for those people in Lutz, Florida. Strike a bed of soft yellow rock. James Marshall, scooping up a dozen pure gold nuggets in his wool top hat, claims, "Boys, I've got her now. The California gold rush is on, but the miners go down in history as the 49ers because the Transcontinental Telegraph and Railroad do not exist. The news does not reach the East until August, and it takes prospectors months more to reach California." And Andy Heck's going to be talking on his show tonight about Bre-X. And he's going to give you a little quote from Mark Twain about what real gold mines are. But we'll talk more about that. I think I'll look very forward to it because that was kind of the very beginning of my trading career as Bre-X. We'll be back after this short timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
2282 on the S&P cash, 2.44 billion shares. So not a bad day out here, but I thought we probably needed to be in the neighborhood of about 5 billion shares today, and probably enough maybe to hold the market up here. But my guess is we're going to start seeing some stocks have some weakness as it looks to me right now. I'll know more tonight. Looks like we don't have a lot of people willing to short the market. And for the last, 45, 60 days, to me, a lot of this has been on the backs of shorts who just will not give up. And normally markets tend to crest when the shorts that continually are perennially on the wrong side finally give up, which makes me think of I'll think of his name here in a second. The big dude for the big trader from Hungary. He's down $1.5 billion being on the wrong side in the last since the election. I guess I'm thinking of his name, but I'll think about it later. Soros, yeah. Anyway, there's various articles anywhere from $1.5 billion to $2 billion on the wrong side of the market. And it only makes me think of one thing, and that is one of the things in Jesse Livermore's book. There's no sin being wrong in the markets. The only sin is staying wrong. But these guys, you got $30 billion. You can stay long a little bit longer than I can. I don't think I could go down $1.5 billion and not feel at least a little sting. As always, never short a quiet market. We're finally out of the trading range we've been in, so it's a little less quiet. Volume's picking up a little bit, but I think we can start looking at positions. To me, the best positions that there are right now are puts. That is because the VIX is nothing, and that means that if even if you're just a little right, you can make money. Normally, everybody wants to buy puts when the market's already headed down. It's kind of like buying house insurance when the house is already on fire. And of course, then you pay up, and the people show up, and they put the fire out. And really, you paid a lot for nothing. So that is always one of those things. If you are an option player, you have to anticipate the market. If you are an equity player, you really have to react to what happens. But by the time you react to an option play, generally they are not the options that you want. But I'm going to say that we are out of at least the quiet market today and into a potential market of movement. Now, I had a couple people I wanted to talk about it today because everybody had a couple people going, well, with all this good news, it just only means that the market will go higher. And I think a lot of people are very confused about the way the economy equals good markets. If I'm a big corporation, we'll say like General Motors or Ford or any of these big guys or a lot of the other folks, someone building a pipeline, I got to put a lot of cash out up front. That does not make my books look good. This stuff does not just land in a field out in Kansas somewhere and cars come shooting out the rear end of it. It takes a year, year and a half. All that stuff has to be bought. It has to be paid for. Now, one of the things that the new administration is talking about is expensing it off over a year. Tom O'Brien says that you could always expense half of it. But at least that helps out a little. But it still means that you're going to be out and expense things. Your books are not going to look good, until next year if you spend the money now. So if you're an industrial company, it doesn't matter what happens. If you spend the money now, the cash does not roll in till later. And guess what? The stock market really looks at one thing, and that is earnings and revenue. If you start spending more and you have the same or less, your stock will 90% of the time sell for a discount. So is it quite possible that all this great stuff could mean more jobs, even more taxes coming into the government, and lower stock prices, at least for a little while? The answer is yes. The market is counterintuitive in so many different ways. If it was intuitive, everybody would be a billionaire. It is always kind of just one of those things where you have to think about the implications, the unintended consequences of anything a government does, and the fact that sometimes you got to feel a little pain before you feel the pleasure. And my guess is that those new businesses that are put in place because of new policies, they aren't going to be there tomorrow, but the buying is going to start. And that means that the people selling to the big companies probably going to do better. The companies actually spending that money, maybe they'll do a little bit better in the short term, but kind of in the medium term the next year, probably going to go down a little bit as they spend tons of cash. Some of these folks are talking about spending $5-10 billion. And again, as you start spending that money, you can watch your stock price start kind of moving down a little bit. I think if anything, since it's not a sure thing, the psychology of the stock market is if they cut 1,000 jobs, I know that they're not spending that money. If everything just stays the same, earnings are going to go higher. But if they spend that money and they hire new people, guess what? I know that isn't going to be an instant turnaround. Earnings are probably going to go down. And they're probably going to go down for a while. And it may take a year or two or even 3 before those things come back. So let's disconnect the economy from the markets. Let's disconnect what's good for Main Street in small town USA, Kentucky, Mississippi, a lot of places that aren't in the news every day, except when a tragedy occurs, because that's where a lot of these plants are going to go. They're going to go in places that no one tends to go to on vacation, no one really thinks about, but they are the silent majority that have been ignored for a while. And probably over the next year or two, the new jobs, a lot of the products that they sell will do better. But you know what? Probably not S&P 500 stocks that they work for, or companies that they work for are on there. But the trickle around will come. And I just think that maybe we need to know that the good term, or the good that happens a lot of times, is immediately sold. And that gives us just one more opportunity to go and buy later. Again, our friend Andy Heck on at 5 o'clock. He's going to be talking about one of my favorite subjects, that is the Bre-X disaster. And I'll look forward to that tonight. Tom O'Brien in the next 2 hours, along with some earnings tonight. So we're going to get into charts when I do come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And what else do we have going on out here? Hang on just a second. I need to actually move out here. Okay. Oh, answered that question. What else do we have? Okay. And just going through a couple of things real quick. Had one of the wonderful folks asked me to take a look at Bright Cove. Is this the same one that's the, let me look at this. I want to say my sister used to work for these folks. Let's take a look. No, this isn't it. Bright Cove provides cloud-based services for video. The company primarily offers video cloud and online video platform that enables its customers to push and distribute video to internet-connected devices. On a fundamental basis, I would be wary of this company. On a chart basis, it doesn't look that bad. But Amazon, Google, not so much Microsoft, but you got two of the biggie, Microsoft and Google, that have huge systems set up for distributing video. Both of them sell cloud services for distributing video. I don't know how a little player could really do well if they had something special. I'd really, on a fundamental basis, be wary of it. I do like this chart pattern, though. Nice pullback on light volume. It's a little lighter than I would put in a newsletter, but you know what? Not a bad looking chart out here. Could it bounce? Certainly could, and not a bad bounce either. To $10 would be my target on it. But I would always be afraid that once again we'd get in another price war between Amazon and Google, and you would see this yet have bigger problems than it's had in the past. This is $13.80. Those kind of tops kind of come into the fall when there were a lot of price wars in Google. And again, I don't know enough about this this company specifically, but I would be very worried about a company like this, very small fish, being in a tank of nothing but hammerheads and great whites. And, so that would be my opinion on that one. Small caps just really haven't been doing that well either, which is one of the reasons why I suspect that there may be a little bit of a pullback in some of these markets. What else do we have that we wanted to look at? Let's look at some of the stocks that are moving today. Another thing that kind of worries me is IBM. It didn't really have great earnings. I thought maybe there were too many people short it, and I think that it's higher again today because everybody shorted the pop again. This may even have one more gap up in it when we take a look. The gap's kind of smalls on these, but to me, everybody, I guess they go back. There's a thing called anchoring, and you can research it if you want, but if everybody knows that gas is $2, and for 10 years gas is $2, to them, it's expensive if it's $2.50, and it's cheap if it's $1.50. 10 years ago, when it was 50 cents, they're not anchored to that anymore. But it's pretty easy to get a price anchored in your head. And once you get that price anchored in your head, it depends on what you think. I don't see anything that magically changed in the earnings. I do see a lot of hatred to companies that actually are doing kind of the right thing. IBM's big move out of hardware and software that was going away was probably the right move to do. We talked about maybe midsummer last year that it certainly looked like Watson had started to turn the corner. Maybe there's a little bit more into this than not. Not a stock that I want to be short, though, when you find out that most of these IBM, for the most part, is being hugely sponsored by Berkshire Hathaway and the Oracle of Omaha. But not a lot of juice yesterday, not a lot of juice today either. And that normally tells me that you're kind of at the very end of a short squeeze in this stock. Like I said, I think that there are many stocks out here with much less compelling business models. But if I was long this thing, I would be pulling the trigger as quickly as I could to get out here at 176. You can call me at 877-927-6648. You can also, email me at path@tfnn.com. And, of course, what else can you do? You can post a message in the den if you want me to look at something. What do we have out here? Top 100 gap down. Let's take a look at stocks gapping up here today. Take a quick look at them. Alcoa, we've talked about this. Here you've got pretty much a ballistic move on this. You've got to wait for the pullback. When this does pull back, my guess is $32 is a pretty good sign to start looking at it. Antero Resources, little gap back up to the previous highs, but not that much in 26. Alibaba on earnings, nice pop up, kind of back into the same price range where it really moved down and did a reversal on the 2nd of November. Did so on 37 million shares. You got 30 million shares today. You're probably going to come in with the same amount. But again, I would never be long Alibaba. If the books ever come out of the toaster oven, you will find out just how burnt they are. BHP, another gap up today. Again, this is on a lot of discussion about pipelines, which I don't know why we ever had any. It's almost insane to me that the absolute safest way to move natural gas and oil was so fought against in it. I know why, and that is that people hate gas and oil and look at it as the Antichrist and Satan. But for the most part, if you're going to transfer it, pipelines are like 20 times more safer than railroads, and I think it's still like 100 times more safer than putting the same fuel on an actual road. So to me, a great deal. But a lot of these industrials kind of reacting to more and more industrial kinds of movements. D.H. Horton, DHI, nice move out here. It's got the volume today. That takes you through the December 8th high of $29.70, $7.40. Yeah, there was a little bit of that. One of John from Philadelphia says they fought Keystone to defend rail profits. There was kind of some of that, but a lot of the money that came to push that agenda came from Hollywood. So I'm going to say maybe, probably not one issue, but many. Another one about what are my thanks on banking stocks, the FAS and the FAZ, FAS and FAZ. We'll look at those when we come back after this time out. But probably one of the best things ever built is a pipeline. Safe, economical. Ugh. Quit making sense.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We said we were going to talk about FAS and that. I'm really kind of concerned from what I'm seeing about maybe the junk bond market and think that we could still have problems. I wanted to go before we got to the financials and look at the TLT. We've had our bounce out here. Now the question is, will the 116.80 with the December 16th low hold as we go back down there? We're down a little on lighter volume. My guess is that in the next 30 days, we retest the 116.80 on the TLT again. We've already had fairly significant energy on the way back down. You know, it doesn't always end up in an ABC, especially in these bigger vehicles. You had a huge move down. That means that you're probably going to get some level of consolidation. But I think you can make a case that we at least have, I'm going to say, an 80% chance of testing this December 16th low in the TLT. If maybe you bounce a few times off of it, volume's lighter, maybe you'll have a bottom. I just don't see any kind of long-term bottom. It was possible to get to 128. Could it turn back up, go to 128, and then complete a huge ABC down that would take us back under 100? That's the other scenario here. I don't see anything where this thing gets back up to 138 anytime in the next year. We would have to have some kind of cataclysmic 9/11 meets Pearl Harbor meets I don't know, Godzilla. So, you know, we don't have a lot of volume down here. I would still probably bet the 116.80 gets tested before this gap at 128, though. And I really dislike the energy in these, especially in the junk bond market. That really tells me that interest rates are going to go higher, probably going to go higher than we think they're going to go. And then, of course, if you can get interest money, why bother with junk bonds? Sometimes you can get a lot of money off of them. But again, I'm not really thinking that a lot of people are looking at that now. But probably the move out of bonds and somewhere else is probably, I think, a given, at least in the way I look at the markets. So when we get to FAS and some of the other ones out here, we'll look at FAZ first. I like the pattern out here, and that is this sideways action. This is showing up on my scans every single day out here. So I'm not one of these guys that is Pollyannish to the idea that these things couldn't have a nice pullback. Again, maybe some of the issues or the unintended consequences we haven't thought of yet changes some of the reasons and things going on. Maybe the change in Dodd-Frank isn't going to be as good for banks as everybody thought they were. Maybe there'll be a lot less regulation, but maybe they're going to make sure that there's some poison pill that there can't be a too big to fail bank on the other side of it. I know they wanted to keep some of the provisions, not all of them. But when I see a pattern out here that's gone sideways since, what is this? Since the 8th of December, really hasn't had any kind of signal that makes me think that this is busting out. Makes me think that there is a lot of energy. And again, when you see something moving this long, for this flat for this long, normally means that there's a big order either on the top of it, if it's at highs, or right below it, if it's at lows. But not a lot of juice in that one today. What was that? The okay. So let's look at FAS. Now this is the bull, and of course they react a little bit differently because, of course, these are actually all based on futures that are actively managed by the ETF. Now, this one's got a little bit more volatility, as it should, as you're back up here at highs. But again, we're on a move today higher and really not seeing any more juice than we've seen before. What I can tell you, though, is that this is the kind of sideways move that big moves precipitate out of. But again, when you look at these highs, it makes me think that there's something going on out here that these things can't bust out from the sideways action already. So there may be something I'm not thinking about. Maybe these financials pull back. Maybe they got a lot of exposure to bonds. So the underlying business and higher interest rates help the banks. But in the short run, maybe the blow up in the bonds that they just can't get rid of because it's really kind of an illiquid market. Maybe it hurts the banks in the short term. I haven't been able to research that enough, but when I look at the patterns out here, it makes me think that maybe there's something bigger going on than I'm thinking of. So we'll continue to keep an eye on it. Got a question to look at the XLE out here. Certainly looks to me like you're going to come back to about 71.50, maybe 71.25 on the XLE. I've just been waiting for this thing to come back down. That would be a beautiful buy pattern out here. You'd gapped up on 45 million shares. You came back to it with 15 million shares. It bounced already. Do you get that double gap out here at 71 bucks? I would have to wait for it. The risk reward just isn't good right here, but could it go right back up to 78? It could. I just couldn't buy it unless it was at 71, but I'm a big chicken. What else do we have out here in some of these stocks that are gapping up? Energy stocks, a lot of them. Chrysler Fiat had a nice bounce that didn't have a lot of associated volume. And again, a lot of this has to do with government action, Trump, that kind of stuff. So we'll look at it. Back up to the highs when we're looking at FCX, Freeport McMoran. Again, a lot of selling steel and copper and everything else in the world. You wanted to see about 75, 80 million shares today. That's from the November 23rd high at 68. You wanted to see that probably 80, 85 million shares today. We got to 43 million shares so far. That's just a couple of things that have me a little bit worried. Corning earnings looked, I guess, fairly good. You got a breakout here, 12 million shares on December 8th. You got 15 million shares already. This thing's up to 26 bucks. GoPro gapping higher. Again, this thing's just going lower with a death rattle. I don't know of anything other than too many shorts in a stock, but this thing's probably going to hover around here for a while until it runs out of money and then go lower. New, N-U-E, New Core, just going sideways. Its gap didn't mean much. Pulte Group, we talked about this earlier, still light on volume when we go back to the December 8th high that had 7.3 million shares, 5.6 million shares so far. So maybe it matches it, but certainly not going to exceed the previous high. Rice Energy, Rio Tinto, nice gap up. Would have liked to see a little more energy. At least it's better than the last 3 days. We'll look at this one when we come back a little lunch. Give me a call, 877-927-6648. Look out for Andy Heck's articles today on Seeking Alpha.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Andy Heck's got his BRIEX special tonight at 5. Andy Heck should be on with Tom O'Brien, I think, in the 4 o'clock hour today, isn't it? Can't ever remember Tuesdays and Thursdays. It's either 3 or 4. But I talked to him a great deal about this BRIEX article because I was always very interested in this subject. And I told him one of my favorite quotes of all time from Mark Twain, and that is, a gold mine is a hole in the ground with a liar standing next to it. That was because after the gold rush, of course, the suckers would come out and they take shotguns and blow gold powder into the walls of the gold mine to sell them. Every gold mine was salted, and just about none of them were worth a dime. But very interesting time, and kind of interesting what gold will actually do to people. Anyway, nice article on Seeking Alpha. I look forward to a special tonight. I talked to him a little earlier, and very interesting. I may bring this up, what we talked about tomorrow during the show, but I thought it was very interesting historical perspective on what's going on in the world. Rio Tinto, nice gap out here on the upside. Now you've got yet just maybe a 3-gap play. I would watch very closely that any of these don't have to, and there may just be a 10% chance out here, but look for any of these that have 3 big gaps just going back in the same kind of month, about one a month, and look for these things to pull back. If you have a kind of a nice blow-off top in Rio Tinto, you want to be very wary of those and the next 3 gaps, because that could bring you down to $34. I don't know what would cause anything like that, but you do have a pattern that does open up. As long as it doesn't gap back down tomorrow, you're probably okay. Steel Dynamics, kind of an interesting pop up here. Again, I need these things to pull back and fill some of these gaps. This one, I'd have to wait until it got to 30. Could it get there? Certainly. SU, which is Suncor Energy, a nice pop-up. Now, this one was a fairly good pattern. I just needed a little bit more downside if I was going to buy this. But a lot of times you never get the full fill of the gap. But, you know, just discretion is the better part of valor. You wait for those to pull back and fill it. I wanted $30.50. But this one gapped up on some decent energy. That energy has been acting as support. Got to 33.79. It's pulled back on light volume. So it did everything you would want to in a pattern. Yahoo moving a bit today on the Alibaba movement. This stock really kind of has ceased to trade on anything having to do with Yahoo, hasn't it? Just it's all whatever the Alibaba stock is worth out there. Nice volume, though. Again, a lot of people on the wrong side of these stocks, and that's pretty much you get one big day like this, a lot of volume. You may get 2 or 3, but nothing's going any better at Yahoo. So if you're looking at trading this, it's all about Alibaba. So what else do we have? Let's go back and take a quick look at the end of the day. 2282 on the S&P cash volume at 2.7 billion shares. Going to be a little light for me for breaking out new highs. But again, it does not mean that we won't hit 20,000 on the Dow tomorrow or the next day. But I don't know if that is so much an issue as maybe some of the low-hanging fruit already available in individual equities. Again, you know, we were long in the daily newsletter, the concrete and rail, kind of seeing that those are kind of tapping out here now. So we'll probably sell those by the end of the day. I'll be looking for a faster horse, both long and short. In the meantime, sell when you can, like I am today. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.